AI, it's a big pushback on our thesis, and so it was easier, by the way, to pitch this a month ago, to be perfectly honest. But if you look at the overall thesis, there's a lot of stimulus in the pipeline. The type of stimulus that you see when you have a recession, the issue is we never had a recession. And so we don't have a lot of excess capacity in the economy. To see this kind of stimulus with a 4 handle on the unemployment rate is a recipe for inflation that comes back more quickly than we've been accustomed to. So I don't think this time around we get Goldilocks for very long. So the pushback, Tom, is people say, all right, we can't have non-inflationary growth because we don't have excess capacity. Why can't AI play that role with productivity? And that sounds logical when you think about it. When you dig into the data, you realize that it's not feasible in 2026. And the reason for this is that AI is really, for now, a phenomenon of the very large companies. Small business America has not really embraced it. And small business America creates 3/4 of jobs in the US. And so until this is adopted broadly, I don't think we're going to see the employment phenomenon that a lot of people are looking for.
So are you calling for higher inflation here in the near to intermediate term?
Yeah, and this is before the events in the Middle East.
So how does that impact kind of where you want to allocate capital here? What are the conversations you're having with your clients?
Yeah, so it's not easy because to me it is a pretty constructive backdrop, but really for cyclical assets. The issue is that there's not a whole lot of that left in the S&P nowadays. The S&P is now a growthier benchmark. And growth stocks are kind of allergic to higher inflation. And so when you have this amount of stimulus, it is the tide that lifts all boats for earnings. But I think when it comes to growth, their PEs are going to be, they're going to see a bit of a headwind in the form of higher inflation later in the year.
Doesn't sound like you're very constructive on the equity markets.
I am. If you gave me the S&P's version of 20 years ago, it'd be jumping up and down,
right?
Because that was 79% of your earnings came from cyclicals when you're going into the GFC. That was a very pro-cyclical index. It's just a different story nowadays. And so I would say my comments, I have more enthusiasm for the Russell 2000 index or the S&P 600, the smaller indices that just have more cyclicals in them.
From late 2025, maybe autumnal 2025, Microsoft's enjoying a drawdown of 32%. Mag 7, and particularly these selected hyperscalers, whatever you want to call them, is that enough of a pullback for Francois Trahan to load the boat?
Not yet. I think, the issue is that, and this is part of the problem in pitching this story, is that there's a real love affair with the Mag 7 because it's been so profitable for so long. And so when you're telling people there's a lot of opportunities in the marketplace, it's just in an unusual spot that you haven't looked at in a while. And so to me, Tom, the ideal time to load up on big growth stocks like that is when we're going to be at the top of the cycle. And I don't think that's the story of 2026.
We saw a rotation beginning, I guess late last year, out of some of these tech names, growthier names, higher multiple names, into maybe some more cyclical.
Correct.
Is that a investable trend in the next 12 to 18 months, or is that a trade? Because we saw a little bit of a pulling back on that as we kind of got...
No, I think it's the beginning. I think it's the early innings of a recovery. If you didn't know about all the craziness going on in the world and you're only looking at the market's behavior, you've seen the Fed cut rates, then we had fiscal stimulus, and leading indicators started to pick up. And alongside that, we saw a change in leadership toward the more pro-cyclical segments. I want to say that starts like late summer, early fall, pretty normal stuff. And so, you tell me when the cycle tops out, and then we can talk about when it will be time to revisit the growth stock story again.
Francois Trahan with us with the Bank of Montreal. I'm sorry I'm old-fashioned. It will always be the bank. It's so spiritual where their offices are across from this most beautiful church in North America, really in the Western Hemisphere. Just extraordinary. BMO Capital Markets in Montreal. You guys own, with your acquisitions in Minneapolis, the study of the Great Lakes. Paul, when did we last mention tariffs?
Yeah, exactly.
I think it was when the expos were going down. Francois Trahan here. A tariff update in the impact on the Canadian Great Lakes, the Gordon Lightfoot territory.
You want to know what the impact is on the
What's
Great
the
Lakes?
impact from the Bank of Montreal on tariffs? We haven't talked about it in 3 months.
Of tariffs on inflation more broadly? And
Inflation
what it
more broadly,
Yeah, well,
and Windsor, autos, and they're going over the 2 bridges, which Carney's arguing with Trump about.
And so it's I think Prime Minister Carney sees it as it's intended. This is a structural change in how we do business. And so, I don't think it's unusual to think that there's going to be a little friction in negotiations, to be honest. Economists of my generation aren't fans of tariffs because they're inflationary. And the reality is our economy is consumption-based nowadays. 68% of our GDP comes from consumption, and inflation is like a variable tax rate, if you will. And so, but it is the policy we're dealing with.
One of the themes in 2025 that worked out very well is, as well as the U.S. equity markets did, the rest of the world, a lot of parts of the rest of the world did really well, in part due to the falling dollar, but other drivers as well. How do you think about the U.S. or North America vis-a-vis the rest of the world here these days?
So, we've had very U.S.-centric comments here, but the reality is the story I just told you is the story of the world. 89% of the world's GDP is in countries that have monetary stimulus in the pipeline. There's only a few large economies that have raised rates. So it really is a global story. Up until the events in Iran, most equity markets are outpacing U.S. equities, which is what you see in a global recovery. U.S. equities have been really resilient in the last month because we're a large oil producer. That insulates us to a certain extent, unlike the countries that import, much of their energy needs. We have a lot of stimulus in the pipeline.
Right.
That also helps insulate us. Our earnings were growing before all of this. And our stock market, our main benchmark, the S&P 500, is very growthy.
Right.
And those are stocks that tend to do well when the economic outlook gets a little murkier, if you will.
What's the energy component of the Standard & Poor's 500?
Oh, it's
single digit.
Oh, yeah,
right?
it's single digits. I think it's like 6%.
Should that, is it on a normative basis? Does that expand over a decade?
I think it will, yes. It's shrunk dramatically, largely, it's been squeezed out by what's taking place in technology.
And I've got a distraction here we're going to have to go to in a moment here off of Dubai's, the Bloomberg desk in Dubai. But Francois Trahan, the earnings season is upon us. Can you even model double-digit earnings growth, I guess, before the war? That's what we're going to see here?
Before the war, yeah, I think you can. Absolutely. Again, when you have the amount of stimulus that you get typically when you have a recessionary backdrop, without one, our earnings were still growing. I think you can get the double-digit earnings territory.
How much credit risk are you taking in the fixed income market these days?
I want to say that I'm a little bit less concerned than the headlines when it comes to that. We're in this transition period, right, where we have stimulus. We're starting to see it in leading indicators of the economy. The PMIs basically have these smile patterns that start late last year, as you pointed out a little earlier. But we haven't seen it in the economic data itself, in retail sales, industrial production, that sort of stuff. And that's usually when the earnings really kick into gear. So it's really rare that something breaks when you're in recovery mode. Recovery tends to patch a lot of things, if you will. It's more on the other side of this that I think you'll want to be concerned. Meaning, once we have tightening and we have a slowdown in the pipeline, which is probably a couple of years away.